Liquidity, the moving part, the thing that makes the market move. Liquidity. This is going to be the most important thing that you learn. One of the most important things that you learn. The reason is because this moves the market. This is how the market moves. This is why random candles just go up and then they spike back down in the direction that you thought they were going to go. Why is liquidity a thing, you might ask? We're going to explain that. All right, so let's jump into the charts here. We're going to talk about liquidity. I said that. I'm just really excited. Liquidity is a great thing. So, what happens when you see some shit like this? You're like, okay, well, we didn't break this low, but then we fucking swept this shit out, and then shabam, we went up, right? That is what's called a liquidity sweep. We swept liquidity, right? Now, why did we sweep liquidity? Well, because big banks and institutions, they want to fill all their orders. So let's think about this. When you go into a long position, zoom out. There you go. When you go into a long position, what do? Well, you buy in, right? And you put your stop loss, right? Which is a sell stop. And then you put your take profit, which is also a sell order because you bought, right? Buy plus a sell equals nothing, right? Remember that shit from middle school? A negative and a positive cancel each other out. The same thing. So with your long position, you're going to enter in a buy at your break-even point, obviously. When you enter that trade, it's a buy, and then to get out of that, you have to sell it to convert it into nothing, to liquidate it. So that's why it's called liquidity, because you're liquidating orders. The same thing goes for a sell order. You're going to enter in a sell position, right? This is a buy position plus, and then to get out of a short, you're going to buy at your take profit, and you're going to buy at your stop loss. Whether you like it or not, whether that stop loss gets hit, it's a buy position, and for a long, it's a short position to cancel out and liquidate that position. So how do we use this information, right? Well, let's go right to this example right here. You can see right here. Let's say you got in to your position right here. You're like, okay, cool. This is what we're going to do. We're going to put this here, and we're going to target this. This is my trade. And then it wicks out and goes up, right? You get stopped out and it goes up. This is grabbing liquidity because people that go long, it faked them out. Bam, swept liquidity, hit those orders. Institutions were able to fill a shit ton of orders and skyrocket the price. That is in theory how it works. That is liquidity. So, how do we use this? Well, guess what? If you can just think like the big banks and institutions, you can be on the opposite side of that. You can be like, okay, let's enter once we sweep out these 5-minute lows. You have all these resting lows right here, or we want to sweep those out, which is this move right here, before we go up. And that is how you would kind of use that. So let's break that down even further. Holy shit, why do I have so many columns? So let's talk about how you use this, right? Well, you're going to go into the chart, you're going to mark out these levels. Where are these levels, you might say? Well, that's where it comes into advanced techniques of liquidity, talking about why different levels get respected and why they don't, right? Every level, every high and every low is a liquidity mark, right? Whether it has liquidity or not depends on when we hit that, if we show bearish or bullish confluences off of that level, right? So how do you confirm that we actually swept liquidity? This is very important because let's say this level right here is a high on a time frame. Let's say it's a 1-hour high. And we're going slow down trend, and you have this liquidity line here. and then we push up. All right, let's use the fancy Nancy marker here. We push up. Did we fill liquidity? No. Did we break past liquidity level? Yes. But in this given situation, we do not know if this is going to be respected or not. How do we know it's going to be respected? Because we are now looking for it to reverse. Liquidity is a level where price has the potential to reverse. It's not a given. It doesn't have to reverse. If it doesn't want to, it won't. Cannot change the market mind. It is like a crazy ex-girlfriend. You can't change their mind. Okay? So it's gonna do what it wants. You just gotta fucking roll with the boat. So here it went up. Did we respect it? No. Why? Because we didn't show any sort of bearish confluences that would tell us, hey, price is going to go down. Now, how do we do that? Well, we do that for a few things. One, we're going to look at the trend on lower time frames. Because if this is on the 1 hour time frame, we're going to go down to the 15-minute, the 5-minute time frame and look and see, okay, what's price doing? Did we sweep it and then we came back down and broke structure to the downside? Cool. That is our first step in our confluence. Let's use an example like this. We were in an uptrend, kind of started to go into a downtrend. It's actually the same example, funny enough. This level right here is not a 1 hour high, but let's just use it. We came up, and let's make this even more interesting. Let's, fuck's sake. Oh my God. What's going on? Leave it. Fuck's sake. What's going on? You see what I have to fucking deal with? Holy shit. What's going on here? Oh my God. You'd think I'm trying to solve, like, world hunger here. Like, I'm just trying to show the liquidity example. Was this it? Where'd it go? Oh my God. Alright, you know what? It's fine. Because we're a professional. We're just going to go to the 1 hour and do this right. Let's say, perfect. Right here. This level right here. Start new. Holy shit. This level right here. We're going to go down to the 5-minute. See this level. Right there. See this level? This honky tonk thing? Cool. So this is a high. This is a level that we potentially could reverse off of if we get up there. So let's go ahead and play this forward. What do we know? Holy fuck. What is this? Goddamn. That normally doesn't happen. Oh, shit. Big fucking candle. Hold on. Let's find another example. God damn it. Holy shit. First time on a computer today, I'm telling you. Alright, here we go. There's another one. There we go. Right there. Yep. Do you see it? Do you see it? Here we go. Alright, this is actually a potential trade that you would have taken. Right around market open. Actually, yeah, maybe. Alright, so this is a 1 hour level, right? Like we were just saying, if price, let's draw our example here because it fucking disappeared out of thin air. If price came up to a level that is a 1 hour significant level, that liquidity could be swept. Is it swept yet? No. We just pushed above it. It has the potential to reverse, but it did not. So the same thing here. We pushed above this. Did we reverse yet? No. What are we looking for? Bearish confluences. Right now, we are in an uptrend. Bullish confluences are showing. Right? We broke structure here. We were going up. We broke structure again. Can't break structure to be in the same trend, but basically we're respecting the trend. We're going up above the highs here, and even filled a fair value gap here. You can see this right here. That fair value gap. that is showing, hey, we're going up. But now we just swept this level. What does that mean? Well, we got to play it forward. See what the next candle looks like. Okay. Does this tell us anything? No. We did put in a high. Okay. Does that tell us anything? No, not really. There's a low. Or not a low. Another candle. There's the low. So what are we looking for now? We are looking for this move down and move up, this low, to be swept and broken below. The candlestick must break below that line in order to confirm a break of structure. Or what we're also looking for is this fair value gap right here to get inversed. Inverse fair value gap is a disrespect of a bullish confluence in this situation. Any situation, actually. What we're looking for is either one of two things. Break of structure off of a liquidity sweep or an inverse fair value gap off of a liquidity sweep. That tells us that, hey, bearish confluences are being put in. Bullish confluences are being disrespected. Okay? So, let's play this forward one more time. See what happens. All right, nothing. Nothing. Okay, sometimes you have to be patient, see? Bam. Check that shit out. You see that? Why would we not fucking just, oh, it's gonna enter. We gotta go. Like if we were here and we were like, oh my god. We were here and we were like, oh my god. Stop right here. We would have got stopped out. You always wait for confluence. Always. So now that we got this big candle, what does that tell us? It tells us two things. One, we inverse this gap, and two, we broke structure to the downside. Great. What do we do with that information? Well, now we can scale down to the time frames and get into that. We're not going to get into strategy and everything, but now price has the potential to reverse, and shabam, it reversed. That is the same thing that we just drew up here. You have a move up, we come up, disrespect some confluences, showing that we're probably going to go down, and that is how you use a liquidity sweep. Because there are things that you could say are liquidity sweeps, but they're really not. For example, let's say you came on the hourly time frame and you're like, okay, let's see. This right here. You're like, oh, cool. Like market is, there you go. Perfect. You're like, all right, cool. Market is gonna open. We're gonna look at this 1 hour thing. We're gonna sweep this out and then continue lower. And you go like this, and you're like, all right, cool. Let's fucking get it over here. Bam! We just swept liquidity, and you're like, hold on. Let's enter this thing. We're gonna go down to the fucking bottom of the ocean here, and this is gonna be a tight ass stop loss because obviously it swept liquidity. Well, genius. It didn't because holy shit, this is the slowest fucking. Did it sweep liquidity? No. Why? Because we did not get confluence that we are going to break structure and reverse. Like I said, write this shit down. Liquidity sweeps. Areas where price has the potential to reverse. Liquidity levels are areas where price has the potential to reverse. That would make it a liquidity sweep. Because we swept liquidity. If we didn't sweep liquidity, then it was just a liquidity level and it got ran through like Bonnie Blue. So right here, why didn't this work? Well, let's look at it. Right, we just did a video on market structure, so let's look at it. All right, you have a move down and move up. We have a low here, a low here, move up, move down, high here. Okay, did we disrespect anything? No. What did we do? We filled this fair value gap. We pushed in, pushed out of it. Then we got actually a sweep of a 5-minute low right here. Shabam. Right? And you're going to be like, oh, well, we broke structure to the downside. Yes, we did. But guess what? That doesn't tell us anything. Actually, this little sneaky bugger didn't even break structure. Look at that. Oh, look at that. Didn't break structure. So what does this tell us? Well, that's a little sweep, okay? And we're going to continue higher. We're still in bullish trend. And then it's going higher. That is a simple breakdown of what makes a liquidity sweep a liquidity sweep. So those are some examples in the chart. We can look at a couple more because this is very important. If you don't know, find this, then you're screwed. Pretty easy. You just basically are going to look back in the chart and see this. And you might say, well, yeah, obviously if you look back in the chart, you're going to know exactly where it swept. You're going to look at it and be like, oh, well, this level right here, we swept it and then, damn, went down. Obviously, right? Now, the next video is going to be talking about where we mark out these levels. What levels are we looking at, right? If market, like, let's say here, here. If we were here, where this red line is, this is market. Disregard everything to the side of it. Like, disregard all of this as if it's not even there. If we're here, what are we even looking for? How would we identify this level before we even sweep it? How would we identify this level? How would we identify our take profit down here? Right? You can see exactly what, like, this isn't a scripted video. This is like, how would we identify this take profit? And you might say, well, we didn't even hit the take profit. Yeah, we did. We just fumbled around a little bit. So how would we identify all this stuff? That is the advanced liquidity secrets that the smart money industry institutions, big banks, they don't want you to know this shit. I'm going to tell you, though. Sorry, JP, I'm telling them. This is simple stuff once you learn it. It's really, really simple stuff. But basically, let's do a recap, okay? What is liquidity? Liquidity is a level in the market where price has the potential to come back up to a level and reverse. Okay? That is what price is. Or that is what liquidity is, sorry. What also can we use liquidity for? Liquidity is also an area where you could use a take profit. Let's say we swept this liquidity right here. Here, we'll even draw the line, make it really fancy here. Came in, swept this. Oh my God. Came in, swept this, right? Where would we put our take profit? I'm gonna let you guys point to it on your screens. Point it. Did you point to this? I hope you did. Why? Because that is a low. What is below a low? Orders. What do we have the potential to do? Reverse. Does that mean we're going to do it? No. But that is the safest place to put your take profit. And then if you did that, right, obviously this is a drawing, but that would be like your trade, is something like that. Same thing on the market, right? If you came up here, it's the 1 hour time frame, don't worry about it. Came up here, so you entered around here, swept this level right here, over here, and then marked that right there. Bam. That is like basically textbook liquidity sweep. So, what else did we go over? Well, we went over that you need confluences to go with it. Why? Because price has the potential to come back to a level just like this. And instead of sweeping it, it just completely runs up to the next one. We need confluence to go with it. What are confluences? Confluences are market structure confluences. Liquidity sweeps run off of break of structure, inverse fair value gaps, respecting fair value gaps in the other direction. Things that you put together. I'm going to have individual videos on breaker structure, inverse fair value gap, and equilibrium. And yeah, that's it. Those confluences put together are going to let you look at this and be like, okay, cool, this happened. We're waiting for this. We're waiting for this. We're waiting for that. Bam. You know, that is what you're going to be looking for. Anyway, that was a 20-minute video. That is a very important lesson. Liquidity. Next video, we're going to talk about the liquidity secrets that the big banks and institutions don't want you to know. I'm going to tell you. Don't worry. It's going to be okay. Everything's going to be fine. I'll see you over there. You better not be falling asleep. You better have your notebook out. This shit's going to get intense. We're just getting started.